Now, to round out our discussion, we're going to look at exports, and we want to break it down based on products, and then as we look into oil. So as you can see, gasoline had another nice increase of about 140,000 barrels, which I'm sorry, 140,000 barrels a day, and you can see that is well over the year over year, 5 year, which is good to see, and we should see some of that continue into next week. But the problem is there's going to be mounting pressure, especially as we have more product coming out of Europe. We have more product coming over from Asia. So one of the things that I just want to mention here and talk about is when you look at what's leaving Europe. Europe is sending it's back to a 5-month high of sending gasoline into West Africa. And when you look at West Africa, typically that's a place where some of these gasoline will go into storage, or they'll try to get some deals into West Africa. Now, the bigger issue is Nigeria is looking to save money, so they've actually cut, or as they called it, abolished subsidies paid to guarantee cheap gasoline in Africa's top oil producing country. So they're looking to save about $2.6 billion a year because they have such a huge budget shortfall. The problem is a lot of these gasoline and diesel subsidies are going away. So when we look at inherent demand, it's just another headwind when we think about demand, as some of these countries that had subsidized fuel just won't have it anymore, or at least temporarily, just because budgets are so stressed. So this is going to, again, push back on the U.S., and it's going to impact the amount of gasoline we're able to export into Latin America. Now, we'll still be competitive. We'll still have exports flowing. It's just that we think that there's going to be additional headwinds, especially as we have some of this West African gasoline that may get resold, or in transit might get turned around into Latin America because they got a better deal. So these are things that we have to look at when we consider how our U.S. exports going to look. And if we continue to see builds, there's discounts that can come just to keep some of these refiners moving. But again, that's going to be a headwind as we go through the remainder of shoulder season. Distillate, something we keep saying that we're going to kind of move up and down in distillate. Yeah, again, this is something that's going to be relatively stable. The overarching theme is going to be, though, we have additional Asian cargoes coming into Europe at this point. We've seen an increase in terms of gas oil inventories in Europe. Some of the distillate inventories in Europe starting to creep higher, and now you marry that with additional imports coming in from Asia. That's going to put a headwind against some of this distillate that normally goes from the Gulf of Mexico over into Europe. So again, then if you consider where we sit in storage, that's going to be a problem. So now you're going to have, which is coming full circle to, refiners are going to have a choice. They're either going to have to give some sort of discount to get some of this distillate off the coast, or they're going to have those economic run cuts. Jet fuel, it's, again, the world is terrible with jet fuel, so there's not much to really say there. The bigger one that we want to look at is when we turn to oil exports. Oil exports are going to have some support. Now, we've seen about 156,000 barrels a day so far through September get pulled into China. Now, again, whether it hits China is different, just given timing. Just to give you an idea, depending on the route that's taken, it can typically take about 3 weeks to go from Texas to China. So that's something to consider when you look at oil in transit. What are things happening right now? We think that there's going to be a fairly strong continuation of some of this Chinese purchases, not only to meet with some of the expectations for the trade war, but also to look at, well, they have new storage coming online. Maybe they need a different slate of crude. So we should get a little bit of support. Again, we're not going to get back to 3.2, 3.3. It's going to be lumpy, but we think that that's going to be able to keep us between that 2.7 to 2.9, because European flows are going to face problems, especially as we have Russian Urals competing, and as well as Saudi Arabia and the other parts of the Middle East competing into Europe. And we have Nigeria also competing into Europe. And as we talked about in our OPEC show, there remains an increase and a significant amount of West African crude available, not only in floating storage, but also some of these cargoes that haven't sold yet that could easily find a home in Europe, which is why that's going to be the headwind, with the tailwind being some of these Chinese cargoes. So now just looking at it compared to over the last, 7, 8 or so years, you can see that on a gasoline level, we're back into this new seasonally adjusted all-time high. Again, we just think it's going to be lumpy. We think there's going to be another slight increase next week, or kind of holding this line as we start to see some of these movements, but it'll start to trend back towards that 5-year average, just because, again, as we talked about in the second segment, it's just gasoline demand is going to struggle, specifically in Europe and some of these other areas, as these economies just really aren't able to kind of get their foot past this 80%, or 20% down from pre-COVID periods. Distillate, we've been saying it, we're just going to hold the 5-year average. We'll probably drop below it, then above it, and it's just going to kind of average out. There's not much to really say. There's, some things, depending on how these shipments appear from Asia, how things adjust. We see some rising headwinds in Europe just from a slowing in exports and imports, but production has been fairly strong. So it's going to be kind of that mismatch of like, when does the imports come from Asia? How does that compete with the U.S.? So again, we're confident in saying for the next month, kind of that 5-year normal. And then as we'll continue to kind of look at this to see if there's any big shifts. Now, when we shift a little bit, we want to break out, because when you marry U.S. crude with U.S. distillate, you can we kind of negate to zero. So now we want to look at Japan, because Japan is now back to the highs of 2020. And when we consider what's happening, crude they had a big increase in crude, not only in storage, but also just in terms of just being delivered and just in storage, onshore, offshore. But the other issue is they have refiners operating at about 17 to 19% below 2019 averages. And you just see additional headwinds. You have exports down, you have imports down. Japan, for being the third largest economy, you can see that this is going to weigh in terms of where we should be going. Now, typically, just comparing it to 19 and 18, you can see it normally peaks and then starts to fall down, or it starts to decline, and we just don't see that decline happening this year. We think it'll kind of normalize a bit, but again, when we look at trade, when we look at movements, it's just going to be an overhang as we go through production. Now, when we turn to Fujairah, we had a nice decline, but again, we're at elevated levels. This is something where it's another shipping hub, so it's nice to see. It's something to watch, because this is a little bit more on the bullish side, but you can see that typically at this point in time, you hit that low and then you start to see those builds, as we saw in 17, 18, and 19. So the question is going to be, do we follow the same trend and we start to build? Again, we're still at such elevated levels versus the previous few years, so it's going to be a problem. And it's being reflected in crack spreads, in some of these margins where some of these refiners are going to continue to struggle to operate. So thanks again for watching. We already launched our economy show, broken up into 5 parts. We put out a special OPEC show looking at a little bit an update on OSPs, supply, demand. And then obviously tomorrow we have our favorite show, the Primary Vision Frac Spread Count. So thanks again for watching. I'm Mark Rossano, founder and CEO of C6 Capital Holdings, coming to you from Primary Vision Network.